G'day everyone, welcome back to Pete's Investing. This is June 15, 2023, the spot gold price update. On our weekly, we're in a neutral positioning, but on the daily, we're in a bearish position. So I prefer to take it when the weekly and the daily are aligned. In this case, they're not, so avoid trading at this point. And you can also see here, we're hitting this key support area, so it can go either way. You can actually break through the support or bounce from there. First off, on the weekly, it's giving us a neutral signal because the moving average of the price chart is not matching the moving averages of the CCI 150. So they're not aligned, so it's giving us a neutral signal. On the daily, however, we've got a bearish signal because both moving averages are aligned. And you can see there, we've got this key support at 1932 and it's resting on that as of end of trading yesterday. Now, you'll notice here I did a Fibonacci retracement here on between that range, and you can see there it's coming, the 61% will be a key area for a potential reversal, or if it breaks through that, then we're going to see further downside, potentially closer to this descending trend line. Just also notice I did draw this divergence, this bearish divergence on the CCI versus the price chart, and we drew this diagonal ascending line and it broke through that and it hit our target. Our target area was between the 38% down to the 61% level. You can see there it's punched through and just penetrated the 50% level there. Hasn't gone quite as far as the 61% level yet. So that's that divergence play worked well. But again, we're trading with the hourly, and again when the weekly and the daily align, so you can see there more closely. That's the same range. There was another divergence, a bullish divergence here versus a bearish divergence on the price chart. We drew a little potential target area. Now the trade hasn't executed, because for that to have executed, we need to see the price break above this descending line. So it needed to break above there, and then that would have been our initial target area between the 50 to 61%. But so the trade hasn't opened up, so that's no harm done. You'll notice also the CCI continued to the downside in line with the price chart, which is what it normally does. So this divergence has failed. Also notice, if I zoom out, I'll redraw that Fibonacci retracement from that low up to that high. And that's that same area. We need to see it. If it does break to the downside, and at the 61% level, at that point, there will be a key area to look out for. If it breaks below that, then we're going to possibly see it approach this descending line for further support. But notice also in terms of price movement and CCI movement, the CCI is still trending down. There's no sign yet of a breakout of that trend line. So if we drew a this is not a divergence, this is just purely trying to show a trend line. You can see there that trend line is still descending. So we need to see the CCI break to the upside, in which case by that stage we'll see also the price break to the upside as well. So I'll delete that so we don't confuse it with any divergence. So also we've got this short and a long back test running here, showing the benefits if the price goes against you or with you. And to avoid this drawdown where the price goes against you, as I keep saying, to avoid that averaging down, we only trade in that period when that price declines from, that was from around April 2022. So go back to April 22. You can see there are no long trades in that area and no long trades in that area as well from April. So you would have avoided taking those long trades, in other words. So to understand that and other trading strategies, reference the links in the description below. Subscribe to us on Patreon, where we also share weekly scans of stocks, currencies and commodities. Thanks for watching. Subscribe, like and share the channel. See you in the next video.